Good afternoon, everyone, and thanks for joining us. I'm going to give a minute or two for everyone who is connected now to make sure that everyone is set before we get started with our presentation. All right, I believe that we have a well-sustained number so we could get started. Good afternoon, everyone. My name is Barbara Cotto. I am the Director of Operations for Startup FIU and lead Startup FIU Procurement, an initiative that was born back in 2018, aiming to assist local small and minority-owned businesses unlock opportunities and bridge opportunities to get wealth. I will say now, about 6 months ago, we became part of a great opportunity for the small businesses in the Miami-Dade County area to join the Miami-Dade Business Navigator, becoming a spoke to our local hub, hoping and aiming that we can expand our services to other communities and other businesses that we had not yet impacted. And for that purpose, we have designed and aligned a series of webinars in order to assist and get you involved and get you the tools needed in order to move your business forward. For that matter, I would like to introduce you to Jasnai Montalvo from our Miami-Dade Business Navigator and consultant at the SBDC, who will be actually in charge of our presentation this afternoon on tips and strategies to improve cash flow. Just a few upkeeping points. If you have any questions, there is a Q&A for you to type in your questions. If you have any concerns, please feel free to write on the chat. And with that note, Jasnai, the floor is all yours.
Thank you, Barbara, and thank you all for being here today. I know as an entrepreneur, one of the hardest challenges we have is finding the time to educate ourselves, to learn, but it's one of the most important things you can do for your business. So I commend you for that. The intention of today's presentation is to make it very interactive, very conversational. Cash flow is a subject that has its principles, but at the end of the day, it depends specifically on the business, the industry. There are different components that go into your cash flow management. So I'll be discussing those principles. And most importantly, I want to hear your questions, your concerns, so we can really give you the tips that apply to you since you're here today. I'm gonna spend a couple of minutes sharing a little bit about the Navigator program. And those of you that are here might know about it, but if you don't, I just want to give you a quick overview so you can not only take advantage of today's presentation and resource, but also everything that comes part of this program. The Miami-Dade Business Navigator is this initiative funded partially by the Small Business Administration, and pretty much it was established as part of the American Rescue Plan, the pandemic, as we all know. And because of this initiative, we have 51 grantees throughout the country that were awarded $100 million in order to fund and support the small businesses in the recovery of this pandemic. Most importantly, the goal of this program is to improve the long-term economic recovery and resilience of small businesses. One thing that this pandemic taught us is that, you're important. Micro businesses are important. So the focus is for business owned by veterans, women, as well as socially and economically disadvantaged individuals. So you're here today, and thank you for the opportunity to serve you. This program has multiple partners, and this allows you to take advantage of the resources that we all have to offer. am part of the consultants at SBDC at FIU, but there are other partners, as you can see in the slides, that we can support you with the coaching, the technical assistance, the access to capital, access to grants. So this is an ecosystem that we all came together to serve you better and to connect you with other resources based on your needs. The coalition locally here in Miami was awarded $2.5 million for Miami-Dade County businesses and surrounding areas. And as I mentioned, the Navigator partners are specifically targeting minority-owned businesses, women-owned businesses, veteran-owned businesses, LGBTQ-owned businesses, all of you that are here today. So today, the reason why you're here, cash flow management. And let me walk you through a little bit of the main topics that I will be talking about. Again, I encourage you to participate, ask you questions. More than the slides, I have the Q&A in front of me, the chat. So I address the specific questions and concerns that you might have. We'll be talking about record keeping, planning and budgeting, learn a little bit more of the cash flow cycle, accounts receivables, accounts payable, and the pricing of products and services. So record keeping, and we can have a whole separate presentation about this topic. In fact, I do, for the most part, QuickBooks trainings, and I dig deeper on this subject on those presentations. But the reality is, you don't know where your money is going or where your money is coming from if you don't keep track of it, right? So the first step in you being able to manage your cash flow is to manage it, pretty much. Like, know exactly what's going on. Use and automate a system such as QuickBooks, for example, where you can literally classify each transaction. You can create sub-accounts so you know specifically what type of income are you having, what type of expenses. And I'll give you an example. If you are, and you know, this would be a good exercise so I can give you specific examples aligned with the audience today. So I'm going to ask you to please put in the chat, what type of business do you have? Maybe just the industry, so I am aware, and then the examples that I will give you throughout the presentation are aligned with your business. So I'll be paying attention. Thank you. So I see real estate. Just take in the next minute, add in the chat your industry: real estate, construction, building, maintenance. All right. Excellent. Thank you for sharing. Building, maintenance, as soon as like property management, consulting, trucking. All right, so feel free to continue putting your comments in the chat. When it comes to recording transactions, I'll give you a couple of examples based on your answers so far. So imagine in your construction business, and it depends whether you serve residential, commercial, but let's imagine, right, that you're serving both residential and commercial. So first of all, you want in your accounting system to classify and create a sub-account in your chart of accounts. This is residential, this is commercial. Even within those categories, you can say within residential, what is the income that's coming from kitchen versus bathroom versus patio, depending on what type of constructions you're providing. Knowing your income at this level of detail would allow you to make financial decisions that would help you improve your cash flow because you can target what is bringing you more money. You can make decisions based on real numbers, right? So at the income level, very important for you to separate your products and services and go as detailed as you can just to know where the money is coming from. On the expense side, even more important because, and on the expense side, I would advise you to, in addition to putting the sub accounts, make sure you always enter your payee, your vendor information when you're classifying transactions. Because, and I'll give you a very common expense nowadays due to technology, we all have to deal with apps and software expenses, right? And then we all have Zoom, and then we pay for Calendly and all of these apps that help us automate our business depending on where we are. And you can put all that under apps and softwares, but when you see that you're spending thousands of dollars in apps, you're like, what specific apps and subscriptions do I have? Do I really need them? So you can dig deeper on those transactions and search by payee and realize, okay, this is how much money I'm spending on this app versus the other. Do I really need it? Do I go into a yearly plan instead of monthly if I'm going to use it anyways? And if I pay yearly, it's going to save me 20%, for example, right? So extremely important. I cannot emphasize this enough, the importance of doing your record keeping. And if you need help with that, I invite you to, of course, join the program, not only participate in additional trainings, but receive support one-on-one from our consultants. We happily help you to implement and improve the way you're keeping track of your numbers. So you can then analyze your income, you can analyze your expenses and make decisions accordingly, okay? One important aspect of your record keeping, depending on the system that you use, is to automate it as much as possible. And in this case, since we're talking about cash flow, is automating your invoicing, right? QuickBooks Online, for example, gives you the ability to do recurring transactions. If you have clients that you have them in a monthly plan, depending on your services, you can automatically set that up and do ACH payments, ask them for their bank information in advance, their authorization, even if they want to do it with credit card, and do it all within the system that you don't have to be chasing your clients every month, right? And even if it's a one-time service, even if it's not the same amount recurring, by you sending your invoice electronically, by giving them the ability to pay right there at the click of a button, and yes, you might need to pay, no, you will need to pay a percentage of your income if you use those services, but depending on the amount, sometimes it's worth it because you get your money faster when they're able to pay right there and even activate your credit card or just be charged a lower percentage if you're only doing bank transfer, but just give them the ability to pay quickly. Nowadays, unless you're getting a big check and you don't want to pay those extra fees, waiting for you to get a check in the mail is going to impact your cash flow immensely. Because how long does that take? You know, by the time they write the check, they mail it, you get it. Yes, you can take a picture of it on the phone, but still, it impacts your cash flow cycle. Okay, so keep that in mind. What are your methods of payment? How can you automate that process? You know, so you give them the ability to pay faster. And I'll be talking more about this subject a little bit down the line, specifically when it comes to accounts receivable and accounts payable. But if there's one thing, if you forget everything about this presentation today, please remember, everything starts with you knowing where the money is going and with you know where the money is coming from. Otherwise, there's no data for you to make decisions and improve it. Okay, so keep that in mind. Planning and budgeting. And this is I'm gonna share just one of the tools that QuickBooks, for example, offers, and it's the cash flow planner. And you can see this example, very visual screenshot that doesn't even require you to classify transactions. This information, this data is coming automatically from the bank accounts, the credit cards, everything that you have connected to QuickBooks Online. So this tool, because kind of QuickBooks have some sort of artificial intelligence nowadays that they continue improving, and by you connecting your accounts to QuickBooks, it automatically starts analyzing the trends, right? And it gives you this visual based on what's happening with your bank transactions for you to prepare, for you to see the trends and prepare. You see that how here in August is already telling us this is not looking good, you're gonna go negative if nothing happens, you know? So using these tools for you to visualize, for you to picture and plan in advance is extremely important. But QuickBooks also has another tool, and this is something you can even do in Excel or use any other tools available for budgeting. But as entrepreneurs, sometimes it's hard to make the time to say, okay, I have to project, I have to do a projection and budget in advance. How do I do that? Like, I'm not sure if it's even going to happen, right? By you doing this exercise is extremely important. And I will give you an example. I mean, I'm an entrepreneur myself. And this is my reality when I did a projection recently. I was considering applying for a loan, right? Because I'm at this stage where I'm growing, I'm implementing new strategies, and I wanted to have some sort of steady funding to sustain my growth, to pay my staff. And I was looking into the possibility of getting a loan. Now, in this process, part of you getting access to capital is to present projections, right? So I'm like, hi, here I am, a consultant, and I haven't done the projection for my own business. You know, it's like, it happens all the time. But when I did that exercise, I realized if I continued the trend the way I was going, I wasn't gonna make it with or without the loan. What was the issue? What was the main issue in my business that this loan was going to be a bandage, but it wasn't gonna solve the long-term problem? The issue was that I wasn't pricing my services correctly. I was not charging enough, okay? And I'll be talking more about it, about pricing your services, because it's extremely important for you to keep that in mind. So the reason why I tell you this story is because by you sitting down and projecting into the future, the projection is about the numbers. They're not coming out of the air, right? You have to think of what are my line of products, what are my line of services, what are all the list of the expenses that I currently have, what is the history that I have with those income and expenses, and based on what I anticipate happening in the business, this is how it's going to go up, this is going to go down. But there got to be some foundation around it, and you can get support through this program 100% in order to work on your projections. But extremely important, because part of this is for you to plan in advance. The working capital for your business, that line of credit that is going to give you the cushion, that business credit card at 0% that you might get for 12 months. That loan at a low interest rate that you might want to get in order to sustain your business for a period of time. You want to ask for that money realistically, and it's the truth. The best way for you, the best time for you to ask for money is when you don't need it. And that's the truth, you know? And some clients tell me, how come if I didn't need the money, I wouldn't be asking you for it? You know, why? But the reality is you need to anticipate the need. So when you ask for it, your business is still showing some sort of positive cash flow, right? When you ask for it, your business is financially healthy enough to show that you're able to pay that money back. When you ask for money when you're in the red and there is no plan to get out of that red, you're not gonna get it. Or there are very little chances that you're gonna get it. So that working capital that might help you with your cash flow, the projections is gonna help you anticipate the need and ask for it in advance. Okay, keep that in mind. Receivables and payables. You know, life would be much easier if we as entrepreneurs just do what we gotta do and we get paid the next day, right? But in reality, it's normally not what happens. And there's nothing more frustrating than you doing all this work, delivering your products, delivering your services, and not being paid on time or not being paid at all because for some reason you forgot to send that invoice, but that's another story that has to do with back to record keeping, okay? But when it comes to your receivables and payables, let's start with the receivables, right? And let's think of the payment types that you have for your business. And I invite you to put in the chat, based on your business, how do you collect the money from your clients, whether it's products or services? What payment type do you use? Do you still use cash? Do you use Zelle? Do you use ACH? Are they able to pay with credit card? Do they pay with check? Wire transfers? What are the payments that you currently use and how are your clients paying you? All right, so thank you for sharing. I see JC mostly gets checks and ACH, minimal credit card, and JC's built-in maintenance. All right. Adrian, checks and ACH, constant reminders for payment. I hear you, Adrian. Yes, I hear you. And the challenge with ACH, many clients, I wouldn't generalize, but some clients don't like doing ACH because they like to control the money, right? It's like, you're gonna take the money out of my account on this day, and I want to make sure I have enough money so I don't feel comfortable. Send me an invoice. You know, that's the response that you would normally get from your clients. But how can you work around that? And the reality is you have to give your clients an incentive for them to do it, right? What are some of those incentives that you can provide? And it has to do with your pricing strategy. If you're setting up the price, but then you give them a 2%, 3%, or a specific amount discount if they pay you within, specific period of time. If you pay me now, this is the price. If you pay me in 15 days, this is the price. And then give them the ability for them to compare and decide whether they want to save the money or not, right? Charge for late fees. It's impacting your cash flow. It's not, you might think if it's hard enough for me to collect the invoice, how come I'm gonna put late fees? Hey, It's your business. You have the control to put your rules, and you have to set your rules in a way that works for you. Okay, negotiate that, but always keep in mind and put yourself in the shoes of your clients. What is it for me? Why would I want to do that? So you have to incentivize the willingness to we should do it anyways, but you know, it's business, and human nature is we have the tendency to do things when we have a little bit of incentive. Okay, so keep that in mind, the pricing strategy based on the timing, based on the payment method. If you pay me via ACH, is this price. If you send me a check, then it's more, because it takes, not only takes longer, but also it takes you more time to do your books later and reconcile. And if you do it yourself, you know, if not, you pay more your accountant to do it because it's more work when we still have to deal with checks, right? And I think the best way is based on your pricing and the incentive that you give them. When it comes, so the goal here is to accelerate the collection. That's the goal. And of course, try to minimize the fees in the transaction, depending on your payment method. But sometimes it's worth it to pay that 2.9% of credit card if you're gonna get your money sooner, okay? Depending on the amount. Delaying the payments, the same way they do it with you. And the reality is you don't wanna do this unethically or in a way that is harming any other business, but some vendors have some more flexibility, the way you can give flexibility for your clients, right? So you keep that in mind. In that case, you want to be the one sending a check because then they take longer to collect it. Or you want to negotiate and say, okay, I'm going to order this much, and then negotiate the pricing accordingly with your vendors, payment plans. Those are, you know, there is one thing that as entrepreneurs, we don't do enough, and it's ask, you know, just ask. There doesn't hurt to ask. And you'll be surprised when you ask your vendors, when you ask your clients, the responses that you will get. Do not assume they don't want to do this, because of that. Just ask and see what comes out of it, right? The other, and I will touch on pricing later, but is there any questions about the receivables and payables? Because I see some responses in the chat. Yeah, you see the average collection is 45 to 60 days. That's a long time. But in your industry, it's not uncommon, unfortunately. My husband is in the construction industry, providing carpentry, millwork installation. And one of the things we have to deal with is that, you know, some clients, they will take that long to pay. But then again, you ask, and there's always, not always, but for the most part, sometimes there are workarounds. And there are, you know, we were able to just start a project that at the beginning they were saying, oh no, we'll pay you at the end of the project. And I'm like, what? This is impossible. Long story short, they're paying us hourly. They're paying us every 2 weeks. Sometimes it takes a few more days, but that's the arrangement, right? And it makes a huge difference when you get those arrangements set up, okay? And again, value what you have to offer, and if they want it, they will make it work, you know, they will make it work. So keep that in mind. Construction and building maintenance, it's doable. At the beginning, you might need that cushion. That's where you might need the working capital. But working capital, for the most part, if it's line of credit, it has to be based on receivables. It has to be based on cash flow. So again, plan in advance. All right, so JC mentioned, yeah, it is a challenge in B2B for sure. I want to figure out how to add that payment discount for early payments. Yeah, feel free to contact us, JC. We're gonna be providing the contact information at the end of the presentation. We'll be sharing in the chat too, so you can get that support one-on-one with one of the business consultants of the programs, because it takes to look into your nitty gritty, right? There is no one number fits all. We will need to look at understand your business, understand your client base, the structure of your payments, the type of services you're providing, so we can find an arrangement that will work for you. So we'll be happy to support you or any other participant that wants to figure out how to set up a payment discount that works for you. That is not, you still want to have a profitable business. Okay. So thank you for sharing that. All right. Pricing. And pricing, what can I tell you? Pricing is not a science. The way I see pricing, it is an art. It takes experience. It takes headaches. It takes ups and downs for you to, oh, I learned that. Never again. Move on, right? But if there are some tips that I can give you today, is to value your time more. We have the tendency as entrepreneurs to do our pricing based on what the competitor is doing. What's the competition and how can I compete with that? And realistically, sometimes your competition has no clue on how to do the pricing either. So they are underpricing and it's hurting everybody in the industry. What can I tell you about that? As you continue learning this art, the most important thing that I can tell you is value the time that you're putting in the transaction, because time is money. Okay. And you could be delivering a product and then do the math based on the cost of the product and whatnot. But how about all the time that you invested in buying it, in merchandising it, in planning? And there is so much that goes into you running your business. The time that your staff, if you have a team, is investing in delivering that time. And I can tell you, time is also the asset that you have to start keeping track of. Because how do you know where your time is going and how much time you're spending on a specific activities if you don't keep track of it? The same way you have to keep track of your numbers. So I personally, and there are different apps, there are different tools that you can use for that. I've heard about Clockify. I personally use QuickBooks Time. It allows me to clock in, clock out. I'm using it as we speak. Know exactly, you set it up in a way that this is the activity that I'm doing for this specific client or for my business in general. And then you can see visually with the reports, what did I do this week? What did my time go? And then if you're offering a set price for a specific project, and yes, you had expenses allocated to that project, your time is a big component of that. And what is the value of your time? If you think of how should I be paying myself if I pay myself, that's another story, which is sure, but that's another story. What is the value of my time? What is my hourly rate ideally to make this work, to make this business and this risk and this efforts that I'm doing make it worth it, So that impacts in your pricing strategy. And the first thing is, one, value yourself, value your time, because the time that you spend in your business is time or the additional time that you're spending for some reason is time that you're not spending with your family, with your loved ones, with just taking a break, whatever it is. It's not easy, but with time you can burn out, and that's very real. So keep track of your time the same way you keep track of your numbers. Use an app that keeps it simple, analyze it, and include that in your pricing strategy. Okay. I want to also help you understand and differentiate what is markup versus profit margin. Okay, because we have the tendency, and I see based on the industries that you share, real estate, construction, building maintenance, consulting, trucking. It's very easy sometimes to set up a markup when you say, okay, if I'm selling this pen and it costs me 50 cents, I'm gonna mark it up 50 cents and then my price is $1. Okay, that's markup. What is the price that you're putting? The percentage, it could be an amount, it could be a percentage that you're putting on top of your product or on top of the cost of your service. And if you are trading time for money, when you're providing a service, there is not so much product associated with it, then you mark it up based on the value that you're giving your time, right? But markup percentage is not the same as profit margin. And I invite you to do the math. And we learned this lesson the hard way in my family business years ago. My family owns a convenience store, right? So we sell all type of products. It's a little dollar store here in Miami. And my parents, the way we started doing it is like, okay, for this department, we're gonna charge 40%, right? So whatever it costs us times 40%, that's what we charge. And we thought that we were making 40% in every transaction, right? I'm like, yeah, we'll do it, 40%. Perfect. When I learned, because we started the business when I was still going to high school, I went to school, I studied accounting. So when I learned this concept, I'm like, Mom, Dad, you're not charging, that's not a profit margin, that's the markup. The margin is lower. It's actually about 7% lower than the markup, because the margin it has to take into consideration not only the cost of your product, but also the way the formula is created, it is not 40%. And also, one thing we ended up, we were making about 7% less by using that formula. So I'm like, okay, if you're gonna continue marking it up, that's fine, but don't use 40%, use 50, right? So we learned that we don't really make 40. But then another lesson is the break-even point. Yes, you think you're making 40%, perfect, but you have to pay all these fixed expenses for your business, right? And using the convenience store as an example, yes, 40% sounds good, but you have to pay rent, you have to pay the electricity, you have to pay the employees, you have to pay the credit card fees. There's a lot of things that go into that. And your break-even point is pretty much taking into account all of your business expenses. What is the pricing and the volume of products or services that you have to set in order to break even? And break even meaning in order for you to not make money, not lose money. I'm just surviving, right? We have to be crystal clear on those expenses so we can work backwards and plan what is the pricing that we're going to have, and plan and set a goal. This is how many units I have to sell, or this is what the dollar amount I need to charge for my services if I'm gonna work this amount of hours to survive. But then we don't want to stop there. We don't want to just break even. We want to make money. That's what we're in business, right? So the break even is just the starting point, but it does give us a lot of clarity, because then when you start seeing sales and you're like, yeah, I'm not getting there. And now you realize why you're getting on credit card debt, why you don't have enough at the end of the month to pay your bills, why you don't have enough to pay yourself, and you're paying everybody else, and you're just surviving. It's key. The pricing is key, right? And it drives everything else. Pricing in a way that is profitable. All right. Sometimes it's better to lose that client, to lose that business opportunity, if it's not worth it. So this clarity, it helps us. Another strategy, and I would keep that in mind depending on your industry, is value pricing, right? And value pricing, and Juan Serrano mentioned he's in consulting. I use value pricing as well for my services. But even if you are in, think of how you can adapt value pricing for your industry, right? And here is the idea of value pricing. First of all, you don't charge based on your time. You don't charge based on just the markup or the profit margin. You take into consideration your value. All right? Not only the problem that you're solving the client, but the value that this problem solved has for this client, right? The other thing is that in value pricing is this strategy of presenting your client options. And if you now pay attention and you think of the services that you consume, you now find it very standard that they have the bronze, the platinum, and then the gold plan. And sometimes they call it, in QuickBooks, for example, they have the subscription for Simple Start, and Essentials, and Plus, and Advanced. And then you see, I want you to be aware now when you are purchasing a product or service, how this tendency of providing options and giving you a fixed price based on what that option is including. Okay, you're selling a package that has different components. That is an art for you to design it, and we're happy to help you with designing of the value pricing. But they're not going to be able to come back and say, but this person is charging me less for what exactly? You know, they're not going to be able to compare line by line. It's like designing these packages of services and give your clients options. So they made the decision. Normally it's 3 options. Like neurologically, we have the tendency to pick the one in the middle. The way you design it is that the higher option is very high. The middle is a no-brainer in comparison with the middle. The lower is a no-brainer in comparison with the middle option. So this whole concept of value pricing is eye-opening, right? So I invite you to Google it. You're gonna learn a lot. Ron Baker, and I'm gonna put it here in the chat, was one of the pioneers of this value pricing methodology. But now there is even more resources and strategies. And I have a template that I can share with you if this is something you want to implement in your business. And another strategy that is becoming way more common nowadays is recurring revenue. And it's that membership concept, right? And when you think of what we consume as business owners, or as clients in any industry, we are subscribed to a lot of services. Just keep that in mind, you know. your Netflix and your Disney Plus, and then you have your those type of membership for the most part is a set price per month, right? And no, they'll increase it for sure. It's very common. So every certain amount of time they increase the pricing, but you know what you're getting, what you're paying for monthly, and if you want more, you just go to the higher tier, right? This membership model allows you as a business owner to have recurring revenue, to anticipate the amount of money that's coming, and to give your client the option and the no-brainer for them to come back, right? If you provide a product or a service that is recurring, and you find yourself sending your client an invoice every month that is about the same because the service or is similar, or the product, you know, nowadays with the products, they have these boxes that they say, okay, I send you this box that has this many materials, and then you get one box every month. You know, there is so much innovation in the membership model nowadays. Think of it, and I'm sure we are all subscribed to some sort of membership. I want you to think of it and think, how is it possible for me to implement this membership model in my business? And it's going to help you get recurring revenue. All right. So again, pricing is an art. I invite you to get support from this type of programs where we can sit with you one-on-one, get a deeper understanding of your business, what the numbers are looking like, so we can work with you in setting up your margins, analyzing your break-even point, implement value pricing if that's something that applies to you, and even the membership model for this recurring revenue. All right. So I'm gonna have the last, we have 10 minutes, and I want to address any other questions that you might have. I see Jesus shared the link to the YouTube channel in the chat, and this is very valuable because for some of you, or you might have other people that could benefit not only from these presentations, but every presentation that we do as part of this program in other subjects. We'll upload it in the YouTube channel. You can rewatch it and just share with other entrepreneurs. Wellness coaching is what I want to offer. All right, Yara, so happy to help. Wellness coaching, the coaching industry is growing tremendously. The need is increasing. I see the opportunity for you to implement some of these tips that I shared today when it comes to your time, keeping track, your pricing strategy, your packages, so you can present it in a way that it helps you and helps your clients, but it really impacts the way you manage your cash flow. All right. All right, Sherry, thank you for sharing. Let me copy that so I can take a look. And just to sharing in the chat information about our next webinar. It's going to be on June 15 from 1 to 2. Dig into digital, very important. Understanding the foundations of digital marketing and analytics. It's the world where we are today, and we are supporting you so we can adapt and thrive in this world of digital marketing, you know, extremely, extremely important. Thank you, Sandra. As I mentioned, this is foundational tips, right? At the end of the day, it takes a deeper analysis in your business. If you don't have an accounting record keeping system just yet, that's key. One of the very first steps you should take. And regardless of where you're at in your journey, in your cash flow management system, contact us. You know, we're here to support you. There's one last thing that I didn't really share in this presentation, but I invite you to also either listen to the audiobook or read the book Profit First. Profit First is a cash flow management system that works with the neurology of we human beings, of having the tendency of making financial decisions based on how much money we have in the bank. And then you tell me, how many times do you share your bank account? Daily, weekly, monthly? So based on how much money we have in the bank, we make decisions and say, okay, we're gonna pay this bill, I'm gonna buy this machine. So Profit First is a methodology that helps you get organized by having different bank accounts for different purposes and allocating a percentage of your income so you can, and the main accounts include operating expenses, taxes, owner's compensation, profit, and then the income account. So I won't be digging deeper on this methodology today, but I invite you to either read the book, I'm gonna put it in the chat, Profit First, or listen to the audiobook if you are on the road. All right? As one more tip, I use it for myself. It's been a life-changing for my business, for sure. Who wrote the book? Thank you, Yandit. I'm never able to pronounce his name. I know it's Mike Makowowitz, and I'm gonna do my best to spell it. Mike, I think I did it right, but if you don't find that, it's something around those lines. That's the author, Mike Makowowitz, and they also have it in Spanish. It's called La Ganancia Primero. All right, I highly recommend it. Thank you, Juan. If you have any last minute questions, we have 5 more minutes to go. And if not, let me just put the last slide with the contact information, so you all know how to get in touch with us, so you can get support with this subject or any other subject. But really, I hope these foundational tips open your eyes for the things that you can do in your business. But there is no one fits all, right? So we have to get to work with you, and we're happy to support you in this process. So visit the site, miamibusinessnavigator.com. You will see an option to request a consultation, and this is all services at no cost to you, okay? I want to help you understand the value of these services. Because if you try to find a consultant that's gonna sit down with you to go over your numbers, to implement a system, it costs a lot of money. The consultants that we, the people that we're here to serve you, we all have expertise and experience in the specific subjects that we deal with. And what can I tell you? Take advantage of these resources. It's only going to help you take your business to the next level. All right. So you can visit the site to request a consultation, or just follow us on social media. We'll be posting upcoming events and resources, follow-ups, like and subscribe, how to say, in YouTube. and just email us if you have any specific questions, and give us a call. All right. Awesome. I think that's all on my side. If you don't have any other questions, let me review the chat really quickly. All right. Thank you all for attending, and we will see you in our next webinar. Have a good afternoon. Thank you. Thank you.